This stock comes into real focus with this news about short seller Andrew Left, the founder of Citron Research. He is in hot water at this hour after the Securities and Exchange Commission charged him and his company with multiple counts of securities fraud. The SEC claims Left engaged in a $20 million multi-year scheme to defraud his followers by publishing false and misleading statements of his stock trading recommendations, both long and short. Charlie Gasparino joins us now with the case. Charlie.
Listen, there's some stuff in here that is very problematic that I need to talk to both Andrew Left about or his lawyers and to find out. I mean, just get to the bottom of what they basically said he didn't have a hedge fund when he was making these recommendations. There's some of that in there, and I gotta go into this and look at that part. But I just want to read you one of the charges, which I found fascinating, because if Andrew Left is guilty of something, then just about everybody I know that appears on CNBC is guilty too. It says here in the second charge, Left uses target prices to amplify the trading recommendations he publishes on Citron Research. Left frequently included a target price on Citron Research reports and tweets that he published, leading readers to believe that this was the price at which he thought the stock would trade. And then they say he traded out before it hit that stock.
NVIDIA in 2018.
Yeah, it was one of them.
Right.
I see that all the time. I mean, people go on CNBC all the time. I'm not going to name names because I don't think they're guilty of anything, but let me just say this and say, I think stuff is going to go to hell in a handbasket. And then before it actually goes to the hell in a handbasket, or as it's going, before it totally plays out, they sell their position. This is, at least this one charge, it looks like they're threading the needle on this stuff, because there are so many people that tout their positions on financial television. I mean, one good thing about you and I is that we're poor and compared to these people.
No.
And we don't trade because we don't trade stocks. We don't, listen, I talk about AMC. Well, I've never taken a position in AMC. I never would. But, I mean, we're in, I trade my money market fund pretty good. But you see what I'm saying here. The financial television and social media is filled with people touting stuff and, and sort of drawing the distinction between a tout, a sale, and not believing a stock might go that high. By the way, NVIDIA, he sold out of NVIDIA. Where's NVIDIA trading right now?
Well, it's at the moment, $112.47, and that, of course, is after that big split.
Oh yeah, but so if it didn't split, it would be a $200+ stock.
Easily, was it?
Right. So Andrew Left said it might be $165. So Andrew Left said it might be a $165 stock.
Well,
and by the way, then he sold it before it hit 160.
Well, he's got a lot of followers, and that's.
But okay, yes, but is Andrew Left really the guy who pumped NVIDIA? NVIDIA is being pumped right now because of
everybody.
By a revolutionary technology known as AI. Andrew Left, I'm sorry, he ain't that smart. I reserve full judgment, and I'll probably be writing about this soon. But, I see some really wild stuff on social media. I see people that tout what are now penny stocks. I saw it with AMC. AMC is now, if before the reverse split, it'd be a 52-cent stock, down 99%. People were saying it was going to go to 1,000. They were saying that Ken Griffin was manipulating it, and this happened. And all you had to do was look at the fundamentals, know it was going to go down in price. And they're going after Andrew Left. I want to see everything. Maybe there's some sleaze in here, but man, look at this. Read these charging papers, and you'll say, "Well, didn't I see that on CNBC the other day?"
Good to see
you. Not
you.
on the Clayman Countdown, but on CNBC.
Good to see you.
You try to cut me off.
No, he said, I see dead people.
Whoa, what is that?
I'm going to kill you if you don't stop talking, because I got Barbara Goodstein.
I was going to say, am I going to get in trouble here?
Finally, guys, I did want to hit this indictment this morning of somebody our viewers may know well, Andrew Left from Citron Research, frequent guest on a lot of different media a lot of different networks, of course, including our own. A federal grand jury in the Central District of California returned an indictment charging him with multiple counts of securities fraud for what they call a long-running market manipulation scheme that reaped profits of at least $16 million. That's the DOJ's press release I'm reading of. I mention that because you go to jail when the DOJ comes after you. It's not just the SEC, which is also involved here, which is civil. DOJ is criminal. Here's something from the press release alleging Left commented on publicly traded companies, asserting market incorrectly valued a company stock, advocated the current price too high or too low, routinely included sensationalized headlines, exaggerated language, maximized reaction, and then knowingly exploited his ability to move stock prices, targeted stocks that were popular retail, posted recommendations. And really, Mike, we didn't get to the heart of it, which is, and then, of course, often did things that were contrary to what he was saying he was doing.
That's always the key. You mischaracterize your own interest and then convey anything that's deemed to be misleading or deceptive or knowingly wrong. That's where you get into trouble. It's not just expressing an opinion on a stock that you own or short or whatever.
Right.
It's that contradiction and potential for misleading investors.
False representations are the key here. 25 years is the maximum penalty in jail.
All right, we've covered Andrew Left a few times on this channel in the past, so let's dive right in. Andrew Left most recently gained public attention again following the return of Keith Gill, aka Roaring Kitty, to social media. You may recall Andrew Left appearing on CNBC at length both before and during Keith's first livestream in 3 years here on YouTube. Left was repeatedly throwing shade at Keith and making a mockery of the situation surrounding GameStop, all while he was shorting GameStop stock. That video is up on this channel, by the way, if you want to go back and watch it for yourself. When Andrew Left appeared on CNBC recently, there was one thing that really stood out to me. Andrew claimed that he believed everything he and Citron Research has ever done has been ethical. I found that very interesting considering what Bloomberg reported about Left after interviewing him not too long ago. According to Bloomberg, Left spoke about engaging in the smash and grab strategy. For those who don't know, the smash and grab strategy is when a trader or a firm establishes a short position in a company's stock, publishes a horrible, scathing article about that company, and then sells their short position within 30 minutes of the article being published. In other words, they cash in on the panic that they themselves have caused at the expense of everyone else before anyone has time to verify or refute their claims. Is that ethical? I'll let you decide. Now let's take a look at the SEC's press release about Andrew Left today. According to the SEC, Left took advantage of his readers by using bait and switch tactics, buying stock immediately after telling his readers to sell, and selling stock immediately after telling his readers to buy. According to the SEC, this netted Left and his firm $20 million in ill-gotten profits. The SEC's complaint alleges that Left and Citron Capital made several false and misleading statements in connection with the scheme. For example, it alleges that defendants told the market that they would stay long on a target stock until the price hit $65 when, in fact, they immediately began selling the stock at $28. It further alleges that they falsely represented to the market that Citron Research was an independent research outlet that had never received compensation from third parties to publish information about target companies when, in fact, the defendants had entered into compensation arrangements with hedge funds. On top of all this, the Department of Justice and the U.S. Attorney's Office for the Central District of California also announced charges against Left today. You may remember not too long ago, Left and Citron Research were absolutely bashing Keith Gill and GameStop over on X and repeatedly throwing shade at them. This is just a screenshot of Citron's feed over on X, and it's just a small snippet of the many frantic posts they made bashing Keith and GameStop after announcing that they were shorting GameStop stock. I find it so interesting that many in the financial press accused Keith of manipulating markets when all he did was buy the stock of a company he likes with his own money. He shared his thoughts about that company, and he posted some memes online. In my opinion, Keith has done absolutely nothing wrong, and I'm curious to see if defamation charges will be brought against Left and Citron at some point in the future, whether from Keith or from some of the companies that have had their stocks slammed because of Citron publishing short reports and then cashing out very quickly following the panic they caused. Look, I don't have a problem if someone goes long on a stock, someone else goes short on that same stock, and we all play by the same rules. But that is not at all what we've seen in recent years. We've had to deal with a plethora of short and distort campaigns, market makers doubling as hedge funds, large portions of individual investor order flow being routed off exchange to non-transparent dark pools, and the list of problems just keeps on going. At the end of the day, what individual investors want is simple, and nothing we're advocating for is beyond the realm of reason. Individual investors want a free, fair, and transparent stock market. We want large institutions to be held accountable for their actions. We want individual investors to have access to the same real-time data from exchanges' better private feeds, which is currently only available to the large firms on Wall Street. We want short sale data to be reported in real time. We want an end to excessive amounts of failures to deliver, and we want entities who fail to deliver on their obligations to be held accountable. We want an end to payment for order flow due to the insane conflicts of interest it creates. There's a reason why so many other countries have already banned it. We want the exchanges to be not-for-profit utilities as they once were. The exchanges becoming for-profit ventures has created so many conflicts of interest at the expense of individual investors. We want increased competition among market makers, and we want all of individual investors' orders to be routed directly to lit transparent exchanges rather than opaque alternative trading systems known as dark pools. Ultimately, it's simple. What we want is a stock market that offers a truly level playing field for all investors. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.